Hey guys, welcome to TechCity Insights. I'm Bella Rizukoji. Now, very many a times when you hear about startup owners, you hear inspiring stories like, oh, I was unemployed for a long time, or someone inspired me to do this or do that, or my parents made me do it, or because I had failed in this area of life, I decided to start up something to make an impact in the world, etc., etc. But hardly do you ever come across someone who has been in the Nigerian army, someone who has actually been in the National Assembly and who has dabbled in the private sector as well, come out eventually to be a startup owner. Please make welcome Olajide Abiola. He's the co-founder and CEO of KiaKiaco. It's nice to have you here.
Thank you very much.
Tell me about your journey. How does someone like you with such an interesting history have anything to do with startups?
For me, it's just about identifying a need and opportunities or a pain point and evaluating my skill sets, my experience and my level of exposure and aggregating all of that to address that particular problem or exploit that opportunity. And that was what informed my venturing into the startup world. And when you look at the industry or the sector we are operating in, which is the financial services, we are a fintech organization, there are a lot of areas where Nigerians for decades and for years have been facing a lot of challenges, especially with regards to financial transactions, identity authentication, and also access to credit and all of that. And we looked at the one that our skill sets, that is myself and my other co-founders, was most suited for in addressing, and that was it essentially for me and my team.
Now, looking at KiaKiaco, there are quite a number of other startups that provide this service that KiaKia is here to solve, the problem that it's solving. What's the difference with KiaKiaco?
There are a lot of uniqueness about KiaKia. We are not just a lending company or a credit providing startup or company. One of the things we do, because we understand that majority of bank account holders in Nigeria do not have credit history or credit information, which makes it impossible for them to access loans, business and consumer loans from mainstream financial institutions. So if you look at the statistics from CBN, from AFDB, from IFC, the private sector arm of the World Bank, you will realize that the performance with regards to access to credit is very, very abysmal. Just less than 20% of Nigerian adults, have access to loans with any of the financial mainstream financial institutions, that's deposit money banks or even the microfinance institutions, in spite of their proliferation across the local governments in the country. So what we do is that we close a lot of gaps. Like for instance, we perform credit scoring using non-traditional data. Like we use digital image forensics, aggregate all of this data regarding a person's income, age, marital status, geographical location, expenditure. A number of these data, we aggregate them to perform credit scoring to determine the credit worthiness of the individual, and in order to enable them access credit. Another thing we also do that forms the nucleus of our self-learning algorithm that performs this credit scoring is the issue of psychometry, whereby we use the behavioral pattern of an individual to determine the credibility of the individual, because there are two components in credit risk assessment. There is the component of credit worthiness and there is also the component of credibility. The credit worthiness has to do with the ability of the person to repay. You know, the person having income, ample income to pay back. And then the other aspect has to do with the character. Does the person have the requisite character to actually pay? That is the willingness to repay a particular credit. So we aggregate this to form the nucleus of our risk assessment and credit scoring. And so to enable us provide direct loans and also peer-to-peer. So what we do is that we profile credible lenders and also credible borrowers and then connect them. So you have people, rather than saving up their money, who are able to actually lend out this money through our platform for certain interest rates. So we facilitate this lending and we just take a commission on it, essentially.
That's interesting.
Yes.
How do you make your money?
From interest on direct loans. Like I did say, we give out short-term loans between 1 to 60 days to individuals who just want to meet, unexpected financial needs, emergencies, groceries, maybe new equipment and all of that. So they're essentially consumer loans, short-term, and range between 10,000 naira to 500,000 naira, depending on your income and a number of other factors, which the proprietary credit scoring algorithm performs and determines automatically with minimal human intervention whatsoever. So we charge interest rates on that, and they are unsecured. They are not secured against any form of collateral or assets. It's just based on your creditworthiness and credibility, and with a mild form of with a very, very mild security, which we call social collateral. And so we charge direct interest rates. We use our money for that because we are it all depends on the credit score of the individual. So, and it's on a daily basis. So you are only charged for what you use. So if you borrow for 7 days, yes, and for 7 days, you only get charged for 7 days. And that's saying about 6%. Or 4% thereabout, like I said. No, for that duration. So once you break it down, we charge from 0.3% to 0.8% per day. Like I did say, it depends on your credit score, your performance, and an aggregate of factors that defines your financial health as an individual. And then we also have the peer-to-peer, where we just take a commission of 1.5%. on whatever loan. And for the peer-to-peer, they are much more longer, about 6 months. I mean, the tenor is about 6 months. We have 3 months to 6 months. It could go for as far as 9 months, depending again on the performance and also the credit score of or the cash flow of the business operator or the entrepreneur in question. But we typically do not finance startups. Existing entrepreneurs, business with cash flows, who just need, to restock and all of that, who have liquidity issues per time, and individuals. So that's what we do. So we just take out 1.5% from whatever interest rate is charged.
Let's come down to the platform, KiaKiaco.
Yes, that's you.
There is a certain Mr. K.
Yes.
Tell me about this character.
Well, that's the personality of the bot. Okay. It's a virtual assistant. And if you look at the trend in technology today, you realize that there is a growing application of artificial intelligence and machine learning, essentially, to develop products. The aim at the end of the day is to streamline business processes and make and achieve efficiency in service delivery. So the KiaKia is a virtual assistant, both for customer service and also transaction processing. That's for loan applications. So prospective borrowers or visitors to the site are able to ask the bot, which is Mr. K.
So Mr. K has this very interesting costume, a black suit and a pink or purple lapel.
Yes.
What does that
with
stand
that
for?
Of Nigerian flag.
Why did you decide on that?
Perception is very, very essential to whatever in terms of products or service delivery or something that has to do with customer-facing services.
Yeah.
And if you look at the general apparel of workers in the financial sector, it's kind of corporate and formal. And so we decided to project Mr. K's personality as that of a bank staff or bank official, to give it a personality that people can easily identify with and relate to the kind of services that Mr. K represents.
So the function exactly? his virtual assistant?
Yes, he's a virtual assistant that handles customer services and also transactions. So you don't want a situation whereby you keep customers waiting on the line, or they have to wait for emails and all of that. They can have all of their questions answered relating to either inquiries about our services or about our offerings or whatsoever it is, or their transactions, their account details, and they can also as well request for loans. They create an account. Mr. K does that through intuitive conversations. Mr. K asks the questions, they provide the data or the information, and it goes back and forth. So it makes the whole process of engagement, customer engagement, easier, more streamlined, faster, cheaper, more convenient for both the customer and also KiaKia as a whole. And as well, it collects volumes of data which it uses to enrich its knowledge base in order to better serve the customers.
So are you sure that Mr. K would not get to a point where he is stuck or the user is stuck and there is no actual progress in that conversation? Because I mean, sometimes you have to put into consideration the queries. For people who are not very tech savvy, for instance, they could use some kinds of lingo, right, that Mr. K will probably not understand. Have you catered to that concern?
The way it's programmed, because people have a lot of misconception about artificial intelligence. It's not as though maybe a bot, let's use Sophia for instance, they are setting the robot, It's not as though it has a mind of its own or it just evolves on its own or something like biogenesis. No, it's what it's programmed. And that's why it has a self-learning component. So the more it engages, the more it enriches its understanding about customer behavior, customer language, customer queries, and understanding, pattern recognition, and it enriches its database in order to be able to robustly address the issues and the point of interactions of customers. So this is a very, very important question you asked. So that's what it does. It aggregates all of this data, expressions, language in local parlance, because we take into cognizance the use of English in our climate or in our geography, in our society. And we've programmed Mr. K's self-learning engine in a way that understands all of this pattern to build its understanding and its responses to clients.
That's interesting. Yes. How old is KiaKiaco?
KiaKia is 1 year, 2 months. Or I would say 1 year, 6 months, because we're initially in private beta for 5 months. Testing the algorithm, the platform, to better understand how it works. Because one of the things we did, we didn't just launch a product and started learning after launching. We adopted a research-driven approach to our product development. And so we're able to understand a lot of stuff, get feedbacks from selected people in the industries, use it, let's see the experience. You did the A/B testing, because initially it was just a web application, but then because we realized that the level of financial education of Nigerians as regards this kind of service was low. And financial education generally was low. And there was relatively low to no access to financial services such as credit loans, online loans. We now decided to embark on the development of the virtual assistant, Mr. K, to address customer service and also transactions like account creation, loan request, attestation, that's guarantee, and a lot of other services.
It's interesting that you mentioned the fact that the financial literacy in Nigeria is very low, and there has been a conversation around fintech startups sharing the same customer base, as opposed to penetrating the sector and getting more people onto financial platforms and whatnot. How is KiaKiaco solving that problem? Because I mean, you're working with the exact same people who have perhaps the same information of other startups that are offering the exact same service that you provide, and people who also have access to banks as well, the banked, etc. So I mean, in what way are you scaling this? How are you meeting more people? How are you changing the numbers?
Well, there are a lot of factors that come into play in the financial industry, especially the fintech. Unlike perhaps like social or lifestyle or agriculture or any other sector where you have, limited regulation and limited.
I was coming there. It is a heavily regulated industry.
Limited barrier of entry. Now, when you look at the financial industry, for example, I can say that the addressable markets are two, or even multiple, more than two. We have the financially excluded, and then we have the financially underserved. For instance, those who fall into the category of the financially underserved are those who have bank accounts, but who do not have access to services other than depositing of money, withdrawal, and transfer. And that's where about 85% of bank account holders in Nigeria have access to with the mainstream financial institutions. And even at that, there are still limitations with regards to the transfer. And that's why you have a lot of payment startups in the fintech space that process payments and create innovative ways for people to transfer money from one endpoint to another endpoint or settle payments and all of that. Then, in the space of the underserved or excluded, financially excluded, we are talking about people who are even not socially documented, people who do not have bank accounts and all of that. Those are markets that are easily addressable by the mainstream or traditional financial institutions because they can take deposit from the public. People like us, we don't take deposit from the public because we do not have a banking license. We are a lender, so we lend, and we also perform alternative credit scoring, not the kind of credit reports the credit bureaus have. Because essentially the credit bureaus, what they do have as credit reports are information submitted by the mainstream financial institution based on the financial behavior of their customers. So they aggregate this, analyze it, and present it into an organized format as reports and sell it as well back to the financial industry. So when you look at our own industry, for instance, we have about 27 million underserved bank account holders. So the present players, even in the industries, are not sufficient enough to address this market. And when you look at our space, we are not more than 3 in this sector offering online, entirely online. You have a lot of people come out to claim, but because we do not have a lot of consumer investigation going on to actually investigate that are these people really providing what they claim they are, what they claim to represent. So you have a lot of people come or hold themselves out as online lenders, but in actual fact are not online lenders. They may even be geographically restricted to places like maybe Lagos or Port Harcourt. But unlike people like us, KiaKia, and 2 others, maybe 2 others, which I will not need to mention their name.
For obvious reasons.
For obvious reasons, of course. We offer everything virtually, entirely online. And that's why we've been able to cover 22 states effectively without any form of paper application, physical meeting, or whatsoever. So the market is very, very huge. So we are talking about 27 million BVN verified account holders who are in paid employment and also in the formal sector, having income yielding activities, who do not have access to the most basic financial credit whatsoever.
So now looking at how perhaps the adoption rate has been. If, for instance, someone borrows money and they don't return it, what happens as someone with a military background? What do you do to them?
Even with my military background, there's actually nothing I can do.
Really?
Yes, there's nothing I can do outside of what is enshrined in the law.
Okay, and the terms of your startup as well?
Yes.
There's got to be terms and conditions.
Number one, we can submit the defaulter's name to credit bureaus.
Okay.
And based on that, it will affect the score of the particular defaulter, which will cause such a person to be blacklisted within the financial system universally. So what it means is that if you have a bad credit score, a bad credit report, there is no financial institution who has access to who will ever give you credit anywhere. And also, we can actually take legal action against such a person. There are recovery outlets, so we can pass on such a person's details to credit recovery agents or outfits who go out aggressively and do that within the ambit and the limits of the law.
Okay.
And do that. And that is why we also have an attestation model that ensures that a third party is also involved in any transaction. Okay. A third party involving a credible person who says, oh, this person you are trying to give a loan is actually credible. I'm vouching for this person. And I'm also subscribing to be legally binded or obligated, financially obligated in the event that this person defaults. And all of this is undertaken and done entirely online. So
how do you verify these people? Because you know how sometimes you hear things like Nigerians, they will have a way.
Data.
Okay.
Data. And that's the beauty of data. Data says a lot of things. The way you use your phone, for instance, leaves a footprint, it leaves a pattern, and that's what we call behavioral biometrics. It leaves a pattern about yourself, how you even engage with the application of Mr. K, how you provide the answers.
You're sure Mr. K doesn't listen to my conversations?
No, because your interaction with Mr. K, either for loan, either for checking your transaction records, your repayment records, or for general inquiries, Mr. K logs this and forms a pattern based on all of this. So that's why we have behavioral biometrics that says, okay, this is this person's behavior, and then it forms a pattern and it's able to reach a reasonable conclusion about who you are. Now, this is together with other data that are cross-referenced and authenticated.
Okay.
And that is why we also have digital forensics to actually validate the integrity of the data that is being submitted. And so there's a little bit of web mining as well, whereby we're able to verify certain tokens, digital tokens associated with your identity, with your person, with your income, with your location, with your relationships, and all of that. So all of these are the disparate
But is that legal?
component. They are all legal, because once you are subscribing to this, you are saying you agree. There are terms and conditions associated with using this service. You are agreeing for us to evaluate you, assess you, and as well, within the ambit of the law, collect information about you
as a user,
to actually determine your creditworthiness and also your credibility or your suitability.
So, I mean, what would you say are the challenges that you have faced with KiaKia, and even as a fintech startup owner in general?
Okay, I would like to put or contextualize or put challenges in two brackets, because the customer side and also the regulation side. On the customer side, we are talking about a generation that has never really known what accessing credit is like. And as a result of that, have deep level of cynicism about the kind of services we are offering. You have account holders who have had banking relationships, or their account domiciled with a particular bank for 5 years, 10 years, being unable to access the most basic overdraft, maybe on their income, 10,000 or 5,000, now being faced with a platform like KiaKia, offering them access to financial credits between 10,000 and 2 million naira entirely online.
Bank did not give
without
me
any form of asset-based collateral. That how can you just on the strength of my being credit-worthy and my character grant me access to such capital, particularly knowing the general sentiment about the country that Nigerians are dubious.
They're not trustworthy.
They are not dubious. But of the truth, perception is not fact, and perceptions are not facts. And as a technology company, we deal with facts, and we deal with statistics, and we deal with data. And data does not lie. Real data. It can be manipulated, it can be adjusted to reflect what you want, but data does not lie. So, and then we also, on the consumer side, we also have the issue of entitled mentality. And people come and feel that once they make a loan request, they've created an account, and because they've submitted their personal information, they are entitled. And that's where we tell them that application does not guarantee approval. As with
that's
any,
clearly stated.
Yes, as with any merit-based or evaluation process like an examination. And finally, on the part of the consumers, we have the issue of poor reading culture. Nigerians, we have something before them and they wouldn't read it. Nigerians can implicate themselves by going into an agreement without reading the clause or the provisions of the agreement, clause and all of that. They'll just go on and
maybe
agree.
it should be simplified. You know, use everyday lingo.
And that is why, in the first place, to make it very, very interactive and intuitive, and that's why we have Mr. K, because it's now like a conversation, based on themes, based on pattern, based on questions. So it's not that you have a general information. Mr. K addresses your issues and your questions based on specific queries. So it's not as though there's a general information we make available out there that confuses people, you know, with the ambiguity and all of that.
So what is the future for KiaKiaco?
Well, we see ourselves as the leading financial technology market.
That's not cliche. Everyone says that.
Okay, let me not say. Perhaps, maybe that's a cliche. We see ourselves as the go-to marketplace for individual and SME operators to seek and to access credit. I'm just saying it as though I'm relating it to a 6-year-old. Okay. Yes, I'm just simplifying it. We are seeing ourselves.
6-year-olds are pretty smart these days anyway.
Yes, we see ourselves as an online marketplace where credible borrowers and credible lenders are connected.
Fabulous.
And pursue financial prosperity and health.
Ladies and gentlemen, Olajide Abiola, co-founder and CEO of KiaKiaco, has been my guest on TechCity Insights today. Thank you so much for watching, and make sure that you check out the platform. It's web-based. It has an app as well.
Yes.
So download that on Android and the Apple Play Store, and let's know exactly what your thoughts are, and give them lots of feedback. They will definitely find that useful. That's all we have time for.
You can follow us on Twitter.
Okay, go ahead. You
can follow us on Twitter. You can follow us on Twitter. It's at KiaKia_CO. We are very, very engaging and responsive there, but you can come with issues that Mr. K is unable to handle, but I believe there is no issue Mr. K is unable to handle. So thank you very much for having us.
And make sure that you do not behave in a bad way when you loan money from KiaKiaco, because this guy has got a military background and he'll get all Liam Neeson on you. Right? Yes? No?
No.
Thank you for watching. We'll see you next time on TechCity Insights. Bye now.
Thank you.